Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are talking rates, and those 10-year note yields just continue to inch lower. We were flirting with 2% yield, didn't quite get there, but on a weekly basis, lowest settle we've seen since before the election. So now things have kind of come full circle after the election and yields declined and we saw, or rallied, and we saw treasuries sell off. I think that has all come full circle. And right now, it's going to kind of be a game. Will we get through 2%? And if so, how much lower can yields go? Especially when we're talking about the Fed and we're talking about balance sheet withdrawal and we're talking about a lot of different things. But it's been a risk-off trade in this week. Prior to that, it was all about positioning. And I think right now we're going to, the bull trend we've seen in treasuries, recall we were trading 240 yield back in July. So it wasn't that long ago that we were talking about trading 2.5%, maybe possibly 3% by year end. That talk is off the table. And if you look at volatility, we're not seeing much of a bid to volatility. So as the trend continues, we're not seeing any alarmists coming out of the woodwork. We're seeing volatility remain relatively low. Now, it was higher this week, but nothing that was, I would call, a factor in trade. And if we look at the weekend, we have the risk of North Korea. We have the weather risks in Florida with Irma. And that is all going to be kind of what's been keeping Treasury yields low at the end of this week. However, next week we have potentially higher inflation data as well as auctions, which should reverse this trend. So 2% could be a very pivotal level in Treasuries if we do start to see things reverse after the weekend. Ultimately, the bullish picture says the Fed in play means that that's going to keep volatility low, but it's also going to keep Treasuries low unless they do something with their balance sheet. And we might hear about that at the September meeting. That's the market's expectations, although they're not expected to raise rates again this year. So kind of a double-edged catch-22 for the Fed right now. It's all about the balance sheet, but Treasuries continue to go higher, yields continue to go lower. We'll pick it up next week. This is Todd Colvin coming to you from the floor of the CME Group.